It was around 850 startups that got funding. There might be actually good opportunities out there. Not all startups will be highly valued. Is the fact that people have stopped following the herd mentality, right?
Hi guys, welcome back on the another episode of Cut the Noise, where we talk about latest buzz going on in the financial market, investment industry. And today we have Vedant with us, who will be telling us about the funding winter concept, which is very trending these days. As we can see, most of the startups are looking for when will this funding winter will end, and they can get a lot of funding. So welcome, Vedant.
Thanks for having me, Megha.
Yeah. So can you please tell us the concept of funding winter? Like, what is it in the landscape of startups and venture capitalists?
Yeah. So funding winter is in fact a very common term that is used in the startup as well as the venture capital ecosystem. It's a period that is used to describe a reduced investment activity where in the startups in the early stage or maybe in the beginning stage uh, receive lesser funding because investors become very risk averse and they become cautious in general to invest in any particular startup. So this is how the industry has become right now, the startup ecosystem has become right now, and in fact startup winter is a very relevant concept right now.
So Vedant, for those who don't know, can you please give us the snapshot on current situation regarding startup funding and venture capital investments?
Between January to May 2023, as much as only 459 startups, around 459 startups were funded, say close to around 3.4 billion worth of investment were closed in these 6 months. And if you compare the same situation with last year, around this number was exactly double of what it is right now. It was around 850 startups that got funding, and as much as around 13.4 billion investment got closed. So the situation is actually very dismal right now, and the funding winter is actually very prevalent right now in the market.
So with that, here comes my another question, which is, what are the key factors which are resulting in this startup funding decline?
There are a lot of factors that come into play. Number one, which I can think of, is the fact that there's an economic downturn. There's a fear of recession among investors. So startup equity investment is generally a riskier asset class if we compare it to maybe say bonds or maybe any fixed income instrument per se. So obviously investors resort to investing in these kind of risky startups in a very limited way, right? When it comes to an economic downturn or if there's a fear of recession. Second point is regulatory challenges. The government might impose a lot of regulatory challenges on the startup in a particular startup sector. Say for example, say BNPL sector or maybe EdTech sector, there might be a lot of harshness from the government. Third point which I can think of is a very highly valued startup ecosystem. So when it comes to funding winter, investors generally become very risk averse. They tend to shy away from investing in these kind of riskier assets, and they think they have a very different perspective of the funding of the valuations of the company. And they maybe think that these are too highly valued startups, so they just naturally shy away from investing in these startups. So these are predominantly the major points where that actually lead to a startup funding winter.
So as I mentioned earlier, there is a lot of buzz that we can see startup funding rebound after 6 to 12 months. So what is driving this?
When you are investing in riskier assets like say for example startup equity investment, you need to have a long-term vision, right? You can't have a myopic vision where you think of a very temporary period and you make your judgment based on that. Can't happen that way. So people are gradually having a long-term vision. While they are being cautious, they're also trying to explore opportunities without shying away from them completely. They would also want to diversify their investments, which is a key point here, because while your investments are there in safer instruments, there needs to be some sort of diversification when you also start investing in riskier assets just to enhance the overall return of your portfolio. So that, and the fourth reason which I can think of is the fact that people have stopped following the herd mentality, right? So herd mentality is basically following the crowd, right? Whatever the crowd is doing based on the trend, they have actually stopped following that. This is because they have come to their senses. They have realized that Not all startups will be highly valued. If they do their proper due diligence, if they are aware of the risk behind a particular startup, then obviously they will take a much sensible and a rational call on that investment. And obviously, it may not be true that that investment might be really highly valued, right? So there might be startups out there that are actually properly valued and are looking for funding, and investors are actually becoming very vigilant of that, and they are investing in those startups. So in conclusion, startup equity investments are highly dynamic. While there are data points that can offer insights, it doesn't really mean that you should go by those data points. You should conduct your own due diligence. You should keep being vigilant of where you're investing in, keep consulting, keep taking professional advice, and eventually take a more rational call. Like I mentioned earlier in the video, it is important to have a long term view instead of having a very myopic view of the entire situation here. You should carefully analyze the investment opportunities that are out there. At the same time, not try to completely shy away from them, because there might be actually good opportunities out there that are waiting to be funded, good startups out there that are waiting to be funded, and you should actually go and consider them as well.
Thank you so much, Vedant, for clearing all the buzz which is going about the funding winter. So, guys, if you have any questions, if you guys have any doubt, mention those in the comment box below. And if you like this video, share this video with your friends. And don't forget to follow Group Invest, because we'll see you in the next video on the same channel.